Hey, my name is James Nicholson and welcome to my channel. Now in this video, we're going to talk about the opportunities for property investors in 2023. You see, the last few years have been absolutely crazy. Obviously with the pandemic, one would have assumed, and rightly so, that prices should have gone down. They didn't. They went up because people were looking to make sure that they had more space. Now, temporarily, London dropped, but the coast and country and stuff like that, prices went through the roof. I was quite fortunate and didn't know this would happen. Many years ago, I invested in Hastings by the sea, and that obviously went up in value significantly during the pandemic. Now, things are slightly different. You see, we had the furlough scheme, which kept people in jobs. We had the bounce back loans, which kept businesses open. And because of that, the government had to print trillions and trillions of pounds. Now, that was used something called quantitative easing. And that has meant that is one reason why we've got record inflation at the moment. And so we're at 10% inflation. We've been at 11, so we've hopefully peaked and we're on the way down at least. But we've got other things going on. We've got a war in Europe for the first time in a long time, and that's causing an energy crisis. There's so many factors that are really hitting investors. And one of the biggest is the rise in interest rates. You see, 9 meetings that the Bank of England has had, and 9 times they've put the interest rate up. We're at 3.5% base rate now, which is the highest it's been since 2008. And that is really starting to take its toll on the property market. In October, we had a price drop. In November, we had a price drop. At the time of recording this, we haven't had the December figures yet, but we're going to definitely get some more price drops for sure. Now, analysts are saying that the market could drop 30%. Some analysts are saying 10%, but more recently, and I hope this one's right, Nationwide has come out and said they feel we're going to get a soft landing of another 5% drop in 2023. So if you add that to the drop that we've already got, we would have had around 8 to 9% drop in the last 2 years. So as investors, what do we need to consider when looking at deals? You see, there are going to be people in this market that just need to sell. Now, transactions in properties are down significantly. There are less properties on the market and there are less people looking to buy. There are a lot of people just waiting and seeing right now. But there are always going to be some people that just need to sell. And these are the 3Ds really. And so a lot of people, unfortunately, need to sell because someone has died. And so obviously that property will go into probate and then they will want to sell that property to get the money out of that property. Now, a lot of people are going to be struggling at the moment with debt, and that's a big thing at the moment, especially with interest rates going up, right? So people that got credit cards, the payments are getting more expensive each and every month because of rising interest rates. Maybe they've lost a job, something's happened, and that means things are getting more expensive. And when you've got recessions and stuff like that, invariably more people get divorced as well. And so these reasons are why people will be looking to sell. Now, some people will be looking to sell for things like relocation and stuff like that. So let's look at the market as a whole, because different areas different things will work. And these are some strategies that I feel will work well in 2023, as well as one to avoid. So strategies that will work very well are high cash flow strategies. With interest rates rising, it means that your mortgage payments will also be rising, and that means that you'll have less profit if you just do a vanilla buy to let. So in 2023, I think buy to let is pretty much out of the question, right? I just think it's really going to be tough to get vanilla buy to lets working, and you're going to need to look at other strategies. I'm not saying it can't work. And a vanilla buy to let is where you buy it from an estate agent, you find it on Rightmove, and you do, it's ready to go. You just buy it and it's good to go. Now, the buy to let model does work. And so I want to talk about that. So one of the strategies that will work very well, that can work with buy-to-let, is the BRRR strategy. And that is the buy, refurbish, refinance, rent. And that is where you buy ugly houses that need work, right? So there are properties all over the country that just aren't loved, that need some loving, tender attention. And if you can fix those properties, then you can really do well with them on a buy-to-let. So I'll talk about one that quickly that I did in 2022 with my daughter, Georgia. So we bought a property at auction for 60k, right? A rundown 2-bedroom house in Doncaster. Now, it probably could have been a 3-bedroom house. It had a bedroom in the loft. We didn't really count that. It didn't have proper stairs. It had a ladder to get up there. So it was a £60,000 house. We spent 12 doing it up. We were in the deal for about 75 grand. Once all the fees and everything like that's been paid, right? So 75 grand to get the deal. And then we got it revalued once we'd cleaned it up. New kitchen, new bathroom. That's what we're spending here, right? New kitchen, new bathroom, all of this stuff. And the property was then worth £100,000. Now, a bank will lend you 75% of the loan to value. So the value is 100, they'll lend you 75 grand. That's what we've got there. And we pulled all of our money out. Now, that can work as a buy-to-let, even at today's interest rates, because rental yields in the northeast are still very, very high. This would probably not work in the south, right? So you need to really get educated on what areas this can work in. Northeast, this stuff can still work, and then we can run it as a buy-to-let, right? That's one strategy. So this is the BRRR, and this is where you're going to buy, refurbish, refinance, and then rent. So the refinance is where you pull out some of your money or all of your money, if you're lucky. Now, we've done that a few times this year. We've turned a studio flat into a 1-bedroom flat. We've turned a 1-bedroom flat into a 2-bedroom flat. We've taken a 2-bedroom house, and we've turned that into a nice luxury house. And so this is the BRRR strategy. And that's a good strategy through 2023. I think if you can find stuff below market value, either through debt, divorce, repossessions, these sorts of things, these are going to be good deals. Other types of deals that are going to work well are serviced accommodation, right? Serviced accommodation is a high cash flow strategy. That's where you take your property and then you rent it out on Airbnb, right? I've got one of these in London. And so you rent it out on a nightly basis. And you can put it on booking.com, on Airbnb. There's tons of different websites, 20, 30 websites. You can go out there and try and get bookings for your property. Now, let's just say, if you said the Doncaster house here, this gets around 600 rent, right? 600 rent, but we could easily rent that, not 600k, 600 pounds. But we could easily rent that out for £100 a night. And Doncaster's quite popular because it's got the football, it's got Amazon, where a lot of people work at and go for meetings at. It's also got the races as well, right? So if you rented it out for £100, you only need it full for 6 nights in order to make the same amount of money. But what if you got it rented out for 20 nights? You would now suddenly make £2,000 instead of £600. And this is what serviced accommodation does. Now, with serviced accommodation, you can either own the asset, which is the best solution, or you can rent it off people. The one I do in London, I don't own it, I rent it off somebody. And then with their permission, I run it as a corporate let. That's the language that we use here. We don't just say let, we're going to go on Airbnb. We talk about it as a corporate let. And that's serviced accommodation. But you've got to have the right paperwork. You've got to get the right education to do that. But that's a very good strategy for 2023, right? So we've got the buy, refurbish, refinance. We've got this serviced accommodation. And the last one is at HMOs, right? And this is where you run a property as a house of multiple occupancy. And these are doing really well at the moment because a lot of people have got debt, right? A lot of people are getting in a lot of debt. They're struggling with the pandemic. And so they just want to reduce their bills, move in somewhere where everything's fixed price. And so imagine if you had a property that was a 5-bedroom house or a 3-bedroom house, right? So you have a 3-bedroom house, but you have a living room and a dining room. You convert the dining room and the living room into bedrooms. Very easily done. Just put a bed in it, right? But you need to make it nice and you need to do it properly. But you could turn that into a house of multiple occupancy. And rather than getting £1,000 rent for that property, if you could rent out each room for £500 each, you would get £2,500 in rent. And if you paid the, then you would be paying the you'd be paying the mortgage, you'd be paying like all of the other bills. But with a house of multiple occupancy, you should be looking at making at least £1,000 profit per month. And these are the opportunities that you should be looking at in 2023. Now, one other thing that I do worry about that people do, I just cannot see flips, which is kind of the buy, refurbish, refinance strategy, a little bit similar. So it's where you buy a property, you do it up, and then you sell it. Now, the reason I wouldn't focus too much on those in this market, unless you were very experienced at it, is costs can change, right? With inflation, building costs have gone up. But where it really worries me is if the market does drop more, then you might only be making 20% on the deal. But if the market drops 25% in the year, what are you going to do then? You're going to get all your profit wiped out, which is not a good way to be an investor. So I just don't see that as the best strategy. I think the best strategy this year are the buy, refurbish, refinance, rent, serviced accommodation, and HMO. They are the high cash flow strategies. The buy, refurbish, refinance, rent strategy will build you capital. It will build your wealth significantly. The serviced accommodation and the HMO strategies will give you cash flow, which is very important that you have a bit of both in those. Let me know, what do you think about 2023? Do you think property investing is going to be a quiet year? Do you think the people that just go for it will be more successful because everyone's a little quiet? If you didn't earlier, smash the like button on the video, guys. That really helps me with YouTube. Do subscribe. Hit the bell notification. Comment below with any thoughts, any questions. I love all your comments, so do comment below. Check out all the other content on my channel, including this video right here. Bye for now.